Building credit from scratch can feel like a classic, you need experience to get a job, but you need a job to get experience dilemma. But don't worry, it's a solvable puzzle, and millions have done it before you. This step-by-step guide is designed to help you build a strong credit foundation, completely from zero. First, the foundation. Why credit matters. Your credit score is a numerical representation of your trustworthiness as a borrower. Lenders, banks, credit card companies, landlords, even sometimes employers use it to decide whether to approve you for a loan or credit card. What interest rate to charge you? A good score saves you thousands. The terms for things like apartments, insurance, and cell phone plans. Your step-by-step guide to building credit. Step 1. Know your starting point. Check for surprise history. Before you begin, you need to ensure you truly have no credit history. Sometimes, there might be an old account you've forgotten about. Action. Get your free credit reports from the 3 major bureaus, Equifax, Experian, and TransUnion at annualcreditreport.com. What to look for? Check for any errors or accounts you don't recognize. Since you're starting with none, you might not see any reports at all, which is fine. This step is about due diligence. Step 2. Choose your starter. Credit product. This is the most critical step. You need a credit account that will report your payment history to the credit bureaus. Here are the best options for beginners, in order of accessibility. Option A. Become an authorized user. This is often the easiest and fastest way to get started. What it is, you are added to a family member's or trusted friend's existing credit card account. You get a card with your name on it, but the primary account holder is legally responsible for the debt. How it helps? The account's entire history, positive payment history, credit limit, and age, can be added to your credit report, giving you an instant boost. Pro tip, choose someone with a long history of on-time payments and a low credit utilization ratio. They don't max out the card. Make a clear agreement on how you'll use the card and pay them back. Option B. Apply for a secured credit card. This is the most reliable and self-directed way to build credit. What it is, you provide a cash deposit, e.g. $200,500, that acts as your credit line. The bank holds this deposit as collateral. If you don't pay, they keep the deposit. Why it's great. Secured cards are designed for people with no or bad credit. They are low risk for the bank, so they are easy to get approved for. What to look for? Reports to all 3 credit bureaus. This is non-negotiable. Ask them. Low or no annual fee. Potential to graduate to an unsecured card and get your deposit back after a period of on-time payments. Option C. Explore a credit builder. Loan, a less common but effective tool offered by many credit unions and community banks. What it is? The bank gives you a small loan, $300, $1,000, but instead of giving you the money up front, they place it in a locked savings account. You make fixed monthly payments over 24 months. Once you've paid off the loan, you get the money back, minus a small interest charge. How it helps? It establishes a positive payment history for a fixed-term loan, which looks great on your report. Step 3. Use your new credit responsibly. Once you have your first credit product, the real work begins. Your goal is to build a history of positive behavior. The 2 most important factors are: 1. Pay on time every time. No exceptions. Payment history is the #1 most important factor in your credit score, 35%. Action. Set up autopay for at least the minimum payment to ensure you never miss a due date. Even one late payment can seriously damage your budding credit score. 2. Keep your credit utilization low. This is the amount of credit you're using compared to your total limit. It's the second most important factor, 30%. The magic number. Aim to use less than 30% of your credit limit, and under 10% is ideal. For example, if you have a $500 limit, try not to have a balance higher than $150 and ideally under $50 when your statement is generated. Pro tip, you can pay down your balance before the statement closing date to ensure a low utilization rate is reported to the bureaus. Step 4, monitor your progress and add on slowly track your score. Use free services like those offered by your bank, Credit Karma, or Experian to monitor your Vantage score. Watch as your score begins to climb after 6 months of positive history. Be patient. Building a good score takes time. Lenders want to see a long history of responsible behaviour. Diversify later. After 6 to 12 months of successfully managing your first account, you might qualify for an unsecured starter credit card or a small instalment loan. Having a mix of credit types, revolving-like credit cards and instalment-like loans, can help your score, but this is a minor factor. Don't take out a loan you don't need. Step 5. Graduate to better products. Once your credit score is in the good range, 670 plus, you can. Product change. Ask your secured card issuer to graduate your account to an unsecured card and refund your deposit. Apply for better cards. Look for cards with cash back, rewards, and no annual fee. Get better rates. Qualify for lower interest rates on auto loans or future mortgages. Crucial do's and don'ts for your journey. Do's, don'ts, do pay your balance in full each month to avoid interest. Don't apply for multiple credit cards at once. Each application causes a hard inquiry that dings your score. Do keep old accounts open if they have no fee, as a longer credit history helps your score. Don't max out your credit card. High utilisation is a major red flag. Do set up account alerts and autopay to stay organised. Don't co-sign a loan for someone else. You are equally responsible for their debt. Do be patient and consistent. Building credit is a marathon, not a sprint. Don't close your first credit card after you get a better one, as it shortens your average credit age. The bottom line: building credit from nothing is a simple process, but it requires discipline. Start with a manageable product like a secured card, or by becoming an authorised user, make small purchases, and pay the statement balance in full every single month. Do this consistently, and within a year, you'll have built a solid credit foundation that will save you money for years to come. You've got this.